Hello everyone and welcome to Day Trader S&P 500. Today is Sunday, August 15, 2021. This is Dale Woodson, editor of Woodson Wave Report. You can see our subscription services there. I want to remind you, YouTube subscribers, a 10% discount ends at the end of this month. We also have the contest, guess the closing price of the S&P and win free subscriptions. You can see our subscription services there. Also want to let you guys know about our disclaimer and our awards and top 10 finishes over the years. Okay, I usually say it's an exciting week, but I want to say it's an exciting 2 weeks coming up here because of the time spirals, and we'll get into that as we discuss the S&P, Tesla, the U.S. 10-year, and gold. Okay, I also want to remind you guys to hit that subscribe button, and thank you guys for the patronage, the reminder bell, and the like button, which didn't show, but fortunately we have a little picture of it. Actually, a big picture of the like button's there. It's smaller than that, but my apologies for that. Okay, without further ado, let's get into the S&P. We're going to start with a weekly log chart, and you can see we're looking for 5 waves up from the March 23rd, 2020 low, the pandemic low. Okay, you can see here I've got this all drawn out to where we have a wave 1 up, a wave 2 down, the subdivisions of wave 3 here, that's minor degree, and wave 4, and here is 5 waves up, and you can see that 5 equals 1 from the March 2020 low at 44.86. Okay, you can see that there. I want to show you guys the pic of that, get into a little more detail. There it is there, 5 equals 1 at 44.86. The key levels, to get a confirmation and break in trend, a break of trend, is this 4th wave here on July 19th, 42.33. You need a break of that. And further, it's not shown here, but the smaller degree 4th wave low at 43.70. Need break of that for confirmation. You can see we got 3 degrees of trend for 5th waves. If this thing tops at 44.86, there's our retracement levels there of this 5-wave advance. Okay, we got 36.11, 33.40, and 30.70. If this is a retracement of a larger degree, we'll get into that. But first things first, we need this break, then we're going to look at those targets there. Okay, I want to show you guys also, I think I have that on a on a smaller degree of trend. Here from that 8.3 low, you can see 1, 2, 3, 4, and on this one, this wave 5 at a smaller degree of trend equals this wave 1 at 44.86. Ignore these targets. I think we came within 5 points of hitting that 382 on that 4. This is a few days old, but again, at this degree of trend, which is minuet degree, if you will, we're looking for, again, 44.86. Okay, so that's what we're looking at there. I think I might have this in a smaller degree here. Yeah, here's from the March 2021 low. You can see we got a 1, 2, 3, 4, and 5 is close by there at 44.73. And let's see here. Let me just put this up. Where did we close? 44.67. So we're right there, okay? So anyway, we're looking for, why do I mention 2 weeks? I want to show you guys, do we want to show you this first or this first? Let's go with this, okay? Our Fibonacci time spirals. The most famous one from the March 4 low, again, for you new subscribers, I've been doing Fibonacci time spirals since 1999. That one caught almost every high, turning point high for 7 years to 2006. That was the best one. Some of them don't work out. This one and all the time spirals I did over the last 20, 30 years, I started from highs in search of a low, a Fibonacci 55 days later for either a potential crash or just a low. Okay, so for some reason I decided to do the Fibonacci's from the low for the first time on the 3-4 low, and it caught all these turning points with zero slippage. Usually there's some slippage, and this one had a 1 minute slippage because the opening tick on April 29 was high and then it went down the rest of the day. Okay, there's been zero slippage on this. This even caught that 726, which is most likely an expanded flat high over there. We'll get into that later. The next turn date in this sequence is October 23rd. And then from that expanded flat on July 6th, you can see that A down, B up, C down there. We'll get into that with the next chart. This shows the next turn date in the sequence is August 30th. That's why I say the next 2 weeks ought to be interesting. If I could draw this up, the math is absolute, okay? It's going to do what it's going to do. You can't change the math. Your interpretation of the math, or anyone's, could be wrong, could be flawed, could be accurate, but the math is always correct. That's a challenge with Elliott Wave, and especially with Fibonacci, is figuring things out. But if this plays out to perfection, then August 30th would mark a high, and October 23rd, which I believe is a Saturday or a Sunday. Let me look here. August, September, October. Yeah, it's a Saturday, would mark a low. So that would be Friday/Monday for that low. We'll see how it plays out. You don't want to project your own opinions into the market. So we'll let the math play out. We'll see what happens. Was the 13th a high? Did it mark a turn date? Will it keep going to the 30th? We'll see. That's why the next 2 weeks are really interesting to watch. But yeah, this here, we'll see how this plays out. But let me get into the expanded triangle pattern, and let's see, is that it here? Nope, this is it here. Okay, and again, I never make expanded flats as I said expanded triangle earlier. Correction, expanded flats as a primary count, because most of the time they don't work out. But you can see from this 7.6 high in green, and then the expanded flat is in black, we have an A, B, C, where B equals a 1.236 multiple of A, and C is a 1.618 multiple of A. That's an expanded flat, no doubt about it. It ended 2 days later on the 8th. Okay, then we have one that begins on the 14th, and you can see we've got an A down and a B up and a C down. I'm sorry, it's here. It starts on this beat. There's an A down in red, a B up, and a C down. And this B equals a Fibonacci 1.382, and C was more than a 1.618. The reason I'm going back to this expanded flat is because the math is, again, like I said, absolute, and it's playing out. Okay, so if we could possibly have a third expanded expanded flat within an expanded flat, then we're looking at the purple with an A down here, a B up here, and then a C down here. And this B is a Fibonacci 1.414. So you can see here, it's smaller, bigger, bigger. The smallest, the B wave, is a 1.236. The next one in size, also the B wave, increases, but a perfect Fibonacci extension. And the next one in size is increasing to a 1.414. So we'll see if this plays out. It's still alive, but again, I never make expanded flat as my primary wave count. But I also wanted to mention these C waves. Here, this one in black that lasted 2 days. C was a perfect 1.618 of A. This one here in red, the bigger one, the ABC in red, this one was more than a 1.618. So that's why I drew the targets for C. If this high holds, there you're looking at the 1.618 of 42.12. If it keeps increasing and it keeps playing out, then you might expect that this C in purple, which is a higher degree of trend, might go to the 2.618. Again, we've got B wave here, higher here, higher here with Fibonacci. C wave 1.618, more here, and possibly more here. Is it expecting too much to ask for 3 expanded flats, one within another, a fractal of a fractal of a fractal? I don't know, but I can say that this one in black was an expanded flat, and you could definitely count this an expanded flat. So they're fractals of each other, and they keep gaining exponentially in size. You can see the Fibonacci sequence from that 7.6 high, how this is playing out. That points to August 30th. Will that make a higher high? Will it make a low? That's why the next 2 weeks are so interesting. And we have our make or break points on this stuff so we can see. Okay, we know when we get back to that other one here, we know we need to see a break of this low and a subsequent break of this low to see if that August 30th low plays out. Otherwise, we're probably looking at a high, and at the upside, we're looking at 44.86 for in terms of price for Fibonacci perfection. Okay? Again, the math is absolute. We'll see which way it plays out, but we have our targets to the upside and the downside. I continually refer to those as make or break targets. Was there something else I had in here? We did that. There you can see those two Fibonacci sequences playing out. There's our expanded flat, and there is at 44.86 at a smaller degree of trend, and there it is at a larger degree of trend. Okay, moving on. Tesla. So Tesla's interesting too. I have several wave counts up here, so I don't want you guys to get too confused. But there is the all-time high at 900 back in January. Let's look at the purple. Okay, let's do the bullish count first. The purple is an A down, a B up, a C down, a D up, and an E down. That is a contracting triangle. Okay, you got the lower highs and higher lows, and then it should thrust out of that triangle. That would mean this is a 4 right here at this July 27th low of 627, and 5 up should thrust to new highs. Okay, so that would mean this is not a 5, it's a 3. A, B, C, D, E for 4, and 5 up. Need a break of this wave high right here at 728. That would lead to a break of the all-time highs above 900. We'll see how that plays out. That is the bullish count with the contracting triangle fourth wave ending on July 27th. Okay, and we have our parameters there. This is the really key part right here is a 618. You can see where this wave went just above it, and that 618 is 764. That's a key place to get above, okay? Or it could mark a double top, which we'll get into the bearish count. We have 5 waves down for A in red, intermediate degree with parentheses. Then we have an A up and a B down and a C up for wave B in parentheses, and then wave C down. From this 618, if it gets up here, would equal A at 401. Obviously, this is a bearish count. This is 5 down and then 3 up. Watch the circle here for the subdivisions. There's A up, there's B down, and there's C up. It may be complete here at the 50% retracement, but I would allow it to get up to that 618, which is at 764, and the double top is just above at 780. All right, so that is the bearish count there. We would see this top right around here at the 618 retracement, or the double top here, and then wave C would be down. So you'd have 5 down, 3 up, A up, B down, C up, followed by 5 down to new lows. You want to see a break of this E wave low. This is the bears. What do you want to see? You want to see a break of this 627 low on July 27th. That's the first signal. The next one is basically this double bottom here, which is sitting right around 540. This low here is 546, and this low here is 539. So bears, you need a break of this low here. Again, I'll repeat, 627, then subsequent break of 546 and 539, then you're looking at 401. So there's great opportunities to trade this either up or down. You got your parameters here, looking for a break here to move up higher above 900, looking for these breaks to go below the low of 539 and into the 400 area. Imagine the price swings here. You can see a move under 400 or a move above 900. And the beauty of Elliott Waves and Fibonacci is we have our make or break points both to the bullish side. I gave you guys the bullish scenario and the bearish side. So we'll see it play out. Again, the math is absolute. It will prove itself one way or another. That's why this is interesting to watch too. These lines right here, and right here are critical. Okay, I wanted to look a little closer at this E wave low or fourth wave low in the bullish scenario. Okay, so what we would need to see, now we're looking at a 1 hour chart from that E wave low, and you can see we've got a wave up here and a wave down here and a wave up here. So if we could play this out, okay, here we go. This would be a 1, this would be a 2, this would be a 3. This looks like a 4, doesn't it? And then we should see a 5, okay? So long and sideways 4, okay, yeah, looks good. I would think the 5 might end up here, but we can get a Fibonacci on that too. I'm just playing with the bullish case scenario to see if this plays out, because I always want to look at things on the short term. Get that there, and you can see that would be a 2.618 there, 770, 743. All of this depends on those bigger make or break levels, but we'll see if this plays out. 5 up, 3 down, 5 up, and there's your bulls. The next thing you know, you're breaking 764, then you're breaking 900. Okay, that was a little quick look there. Let's look at the US 10-year. Got a lot of things on here. Let me get rid of all of this. Okay, the March lows of 2020 marked the end of a 39-year bear market in interest rates, and we're going up. You can see wave 1 up here, wave 2 down here, and then 3 subdivides, and it's in a 1, 2, 3, 4. We've got a double bottom here right at the 50% retracement, and it's 1.129. Okay, you can see right there the 50% is 1.139. Okay, we hit a double bottom here, and it looks like we got 5 waves up. I'll get into that smaller count, but we're looking for a 1, 2, 3, 4, perfect. Allow for 4, excuse me, to get down to just under 1% at 0.988, but 4 cannot go lower than a high of 1, which is right here at 0.986. So there's still potential for this to go further down. You can see this 4 is an A, B, C here. Basically, excuse me, a 535. And I think I want to get into this a little bit. This is a daily chart, by the way. Let's look at this on a smaller scale to see if this is breaking to the upside. Let's go to the hourly. Let me get this date so I don't lose it. That's around August 3rd or 4th. Let me get into the hourly here. Move this up. There we go. There we go. Okay. Let's move that 4 there. Okay, we've got a 1, 2, 3, 4, 5. Yeah, we should see a break of that. Let me see how 3 was to 2. I'm sorry, to 1. Yeah, it's just above a 1618. And 5, yeah, equals 1 right there. Okay, so let me get rid of this. Let's micro analyze this a little bit more. Let's say we've got, that was the end of 4. Here comes 5. Higher and higher rates. Let's see what we have for a retracement on this. Fibonacci retracement moved up here for some reason. Okay, there's the low. There's the high. And you can see it just hit on the 382 at 1.280. There's the 1.280. That would be nice. Let's see. Let's go ahead and get this a little tighter. Let's see our 3 waves down. See how they extend. This would be A down here. This would be B up there. Get it? There we go. And that's right in between a 1 and a 1.618. Yeah, allow for this to come down to 1.20 or 26 to 1.25 area of the previous 4th wave. It's already there. Since this is 5 waves up, that's 1 of 5. This is 2 of 5. It could be over here. It could go a little lower. Obviously, it can't go below the wave 1 high. Make or break for that is 1.214. And the 618 is 1.215. This could go lower to one of these targets here. And the next move up is 3. which will be strong and powerful, and at least a 1.618 multiple, if not a 2.618. We'll verify that this is complete. We'll obviously put out our things to our monthly and annual subscribers first. That's the advantage of having the subscription to the newsletter service. We put out things like pre-market open, midday reports, and all this stuff, and then we do the videos later. But subscribers get that first-hand information. This is going to be interesting because rates are going up, and they're going up for a long time in a big way. We'll see how that affects the market. I want to look at gold. Gold here, you can see a daily bar from that all-time high back in August. And I said back then, this looks corrective. Okay, this ABC. And then we had 5 waves up, and you can see our retracement levels here. And of course, it went through all the Fibonacci retracement targets, and it made virtually a double bottom. All right, if this is 1 and this is 2, 2 cannot retrace more than 100% of 1. So the make or break for this count remains this low, which is, I believe, 1678. Anything under 1678, and we're moving to a bearish position on gold, a short position on gold. As long as this holds, we're going to assume this is 1 up and this is 2 down. It's negated with a move below that. Let me look at these numbers just to make sure I got it right. That low is 1678, and is that next day the same? Yeah, 1678. That's the make or break, okay? Otherwise, you're looking at 1 up, 2 down, and 3 up. For the bulls, you need to see a break of this wave 1 high, the 5 waves of a lesser degree at 1916. Okay, so there's our bull market make or break target. You need a break of 1916. The bears need a break of the low at 1678. 1678, it's a bearish market, a move above 1916, and we're probably going to, just like Tesla, take out those highs, all-time highs, and go to higher highs in gold. Okay, that should do it for this report, and we'll look at this again. There's our make or break targets to verify a change in trend. The trend is up until these levels are broken. We look for a nice mathematical target of 44.86 in terms of price, and we have our time dates here, and they're right in here. August 30th and October 23rd. That's the weekend, so it'll be the Friday before or the Saturday after. Exciting 2 weeks ahead. Thank you, everyone. Until next time, take care.